As we come upon the end of 2021, there are a lot of headlines out there about what's happening in the real estate market. In this video, I'll tell you what's going to happen using facts. Stay tuned. Welcome back, everyone. My name is Robert Carrillo. I'm an associate broker and realtor with eXp Realty, and this is my channel, Everything San Bernardino Real Estate. Now, as I mentioned at the top, there are a lot of headlines out there about what's going to happen in the real estate market in 2022. So what I want to do is, in this episode, go over some of those myths and tell you about what's going on, because everything really is about how we look at the data. So let's get started. All right, so first I want to address the clickbait headlines that are out there. Really, I think they're doing more harm than anything. And so if you're considering buying or selling, you may be misled by some of these headlines. So that's what we're going to do right now, is go into it and really look at the data to make a prediction as to what's happening in 2022. So this first headline here, you'll see it says foreclosures are shooting up. Is it a repeat of the early 2000s housing crisis? Right. So right away, to me, it just creates a sense of fear and maybe even anxiety over what's happening, because really, look at that. Foreclosures are up. Yes, in reality, they are up year over year. This is over 2020. Right. But if you consider it compared to the regular or normal years of real estate, 2019, 2018, you'll see that the August 2021 numbers were ridiculously lower than they were in 2019, right? In terms of starts, I think to the tune of about 75% off of whatever happened in 2019, right? And kind of the not so great thing is that this is from realtor.com, right? This is a reliable source that consumers will go to get their information, right? So again, foreclosures are up, but not nearly at the rate of the good years in real estate. Here's another one. Mortgage originations will drop 33% in 2022 as interest rates rise, right? According to the industry forecast. Now, look, at the end of the day, what we really need to look at is, yes, mortgages, as interest rates go up, people will be less inclined to get a mortgage. So here, for example, the refi originations are going to drop, right? Again, that's that relationship. As interest rates go up, folks who are already locked in aren't going to refinance to a higher interest rate, right? So then they're just not going to refinance. However, on the flip side, though, interest rates are still very low, historically low, really, right? So originations will increase, actually, to a record of 1.73 trillion, right? So the headline talks about foreclosures, or rather the mortgage interest rates affecting sales or mortgages, and it does. However, it's not really impacting purchases. Right. Here's another one, just in general. And what these false headlines and some of the folks who speak on real estate, right, what they do is really tamper people's expectations, especially buyers and sellers, right? Buyers may wait until the market cools off. But and so look at this stat, right? In February, at the start of the pandemic, you can say 70% of folks surveyed thought it was a good time to buy a house. September 2020, that number decreased to 65. But today, a year later, it's 32%, right? So look, real estate values are still going up. They will still appreciate. Mortgage interest rates are still at a low. And people are thinking it's not a good time to buy, right? But look, now let's get into the facts. Let's get into the numbers, right? These are showing times, but it's a leading indicator in real estate of what is happening relative to activity. So if you look at the line, if we look at the average across the line, you'll see that, yes, we are way below the January, the early part of the year showings. And then if we go back, you'll see that, we at the height of the pandemic, when we were just starting to come back, we're sort of at those numbers, actually even below those numbers. But historically, right, we've got to look at the last several years. Historically, we are way above. Now, we may be below 2020, but we are still way above the good years, the good normal years of 2017 through 2019, for example, right? I mentioned this in my previous update, but sales non-seasonally adjusted were lower year over year. However, compared to the good years, we're still way above. All right. That's look, strongest sales since 2005. Now, let's look at what all of this means as we look ahead. Now, here's Doug Duncan, the Senior VP and Chief Economist at Fannie Mae. He says, right now, we're forecasting mortgage rates to average 3.3% in 2022, right? That's higher than in 2020 and 2021, but still, by historical standards, very low. And so because of that, because interest rates are still low, we're still going to have a demand from buyers. And as the interest rate remains low, it still gives us more affordability, right? It still gives people an opportunity to get in at somewhat affordable rates and terms, as opposed to waiting when prices will go up, and interest rates as well, right? So interest rates will be going up in 2022. Right, and here is Freddie Mac again. Historically, right, 2020 at the beginning, like almost 4.5%, 5% interest rates. Obviously went all the way down at the height of pandemic, down to under 3%. But as you see, early first half of the year, interest rates have steadily crept up. Little dip there, but everyone is really predicting that they're going to continue to increase, really settling somewhere between 3.4 and 3.6% by the end of third quarter next year. All right, so interest rates are still relatively low historically, lower than they were in the good years, right? So that bodes well for the real estate market. Right, and here, home price forecast. Again, everyone here is looking at increases over 2021. I want you to look at, these are the homes, the number of homes sold. So look at 2020, which was out of this world. 2021, we're seeing more homes sold, and in 2022, even more homes are going to be sold, right? So again, that demand is still there, and it's really driven by interest rates still being low and supply. You got to think that during the pandemic, there was no housing being built, rather, right? New construction was at a halt. And now you throw in the supply demand or shortages, and the labor shortages, supply stoppages, or clogged up. That is, I should say, supply delays. That's cause for lower inventory, right? So lower inventory, low interest rates, homes are still going to sell. So ultimately, the chief economist and senior VP, right, for research and industry at Tech, said 2022 should be another strong year for the housing market. Now, let's look, right? This is nationally. Now, if we look at California, you'll see that California's numbers have been steadily increasing in certain areas in particular. So look, right, single family home resales, the numbers are strong. Obviously, in 2022, they're going to be slightly lower than 2021, but look, better than 2020, 2019, 2018. Really, again, going back to the good years, going even back to 2015, right? 2016, 2017 was slightly better than what we're looking at 2022, right? The percent change, while we're seeing that decrease, however, again, that just means over this incredible stretch of real estate that we've had over the past year and change, almost 2 years, right? But beyond that, again, the growth is there. Median prices there, we can't even, we got that big boost in between 2019 and 2020 and 2020, 2021, big equity boosts. So look at those median prices, $834,000. That's bananas. Again, real estate values are increasing, expected at 5% in 2022, which is still, in line with the good years. Housing affordability index, of course, that is going to go down as prices continue to rise. All right, but there's your Interest rates 3.5%. That's overall in California. To me, those numbers look good. I think personally, and we'll look at the next charts, but in particular, the Inland Empire and San Bernardino, I expect uh, to also hold up. And so here are the October 2021 city overviews here in the Inland Empire, right? And so, look, year over year, sales transactions, what we're expecting or what we've seen is a decrease, right? Again, we're comparing 2021 to 2020 numbers. And yes, there's going to be a slowdown. We had a ridiculous run. So there is a slowdown. It's a deceleration. It doesn't mean it's tanking. It means that the increase or the rate of growth is just slower than what it was, but it's still growing. All right. And then look at the year over year median sales price everywhere but Canyon Lake has gone up year over year. And we look at the sales price moving forward, the active listings. The one that, you can look at total days on market, and the lower the number means that the more buyers there are, right? The lower that supply. So things are moving pretty quickly. This price per square foot pretty much everywhere is increased. Now, I want to look at, in particular, San Bernardino. Look at San Bernardino is one of, like, we go back, one of the few cities throughout the Inland Empire that have seen year over year sales transactions actually increase. And then one of the bigger increases in year over year median price. And look at this number 9 over here, 9 average days on market. So in the Inland Empire, really around San Bernardino, look at Riverside, Rialto, Redlands. Values are going up. Sales, number of sales may decrease a little bit, and that may be because of the higher price points. But look at the number, like the demand is still there. And I'll tell you, it boils down to how people value real estate, how people value home ownership. Like right now, in my home, I have my home office, right? I don't, this was really in reaction to the current environment that we have, right, with COVID. And so people are seeing the value in their homes. And so one of the, and we'll look at one of these future slides, but look here, right, this slide, what I'm trying to show is that people's needs and wants in a home have changed due to the pandemic, right? Don Layton, senior industry fellow at Harvard University, saying that really, owning a home is beyond just the finance, the economic benefits, right? Such wealth creation, therefore, provides a major social as well as economic benefit. So it's not just an economic benefit that we're looking at when we're looking at home ownership. Right? I've shared this bit of information before. And again, it basically is to the point that people are looking at the value of their home beyond just monetary, right? There are reasons they feel safer. They feel it's more important to them, right? Because people were through this pandemic, right? Staying home became a necessity. And again, it's renewed gratitude. And this is a survey by the State of the American Homeowner in 2021. Another little quick tidbit, right? Homeowners feel emotionally attached to their home. Pre-pandemic to now, you see an increase there. So at the end of the day, one of the, I think, things that have changed with the way real estate and home ownership is perceived. Again, I've alluded to this in the past. I think in the 2010, 2011, there was sort of a movement away from home ownership. People were looking at downsizing, being able to travel more, leisure, millennials looking at different things, right? Not wanting to be tied down to a location long term. But I think now, post-pandemic, the decision is not just financial, it's also a lifestyle decision, right? So people want space, people want the backyards, people will opt to travel less, right? Save a little bit of money and invest that money into making their home more comfortable, right? Improve that backyard space, that front yard space. But so look, the headlines are out there, ringing alarms and whatnot. I think 2022, 2023, we'll see continued values going up. We'll still see strong sales. as the home builders start catching up and putting that inventory out there, and as current owners are seeing that, hey, their moment for selling may have passed, more inventory will be up out there, and that may level off the pricing and the valuations. But I think we're, a couple of years away from that happening. And in places like San Bernardino, I think we're even further away from that happening, just because of really all of the great things that San Bernardino has to offer. All right, folks, thank you for watching. I would say next thing you need to do is really subscribe if you haven't already. If you haven't watched State of the Market for my previous episodes, do that. And then lastly, there'll be a link for your home buyer's guide or home selling guide, right? Whichever camp you fall into, there's a link to download that guide, and then one for millennials as well. So let's get it going. All right, peace. Thanks for watching.